With a fresh analysis for the day. Okay, today's Monday, 30th of June, 4:18 p.m. We are deep into London session, and today's pretty interesting because it's not only the first day of the week but also the last day of the month, and that is why we are in the monthly chart, looking for areas where price of gold will relatively close at. Okay, we are figuring out where price will close today and putting our bias accordingly. So, before I get deep into the top down analysis, I want to first cover what are the factors driving gold for today. A couple of factors, and they are generally supportive of a bullish gold as they do apply pressure on the US dollar. Okay, firstly, we are seeing the weakness in the DXY dollar index. We are seeing weakness there. Furthermore, we do see the trade with Japan, negotiations with Japan is not towards an optimistic route, and this does add pressure to the US dollar. Inversely, it supports gold. Furthermore, we do also have Fed rate cut bets. Markets are pricing in a 70% probability in a September rate cut, and this will then favor gold. On the technical point of view, on the technical side, we are looking at a couple of bearish breaks, and this in line with the fundamental drivers does support a bearish gold. So those are the couple. Okay, so the catalyst for the week will be tomorrow. We do have Fed Powell, the speech by Fed Powell. This will hit on the policies in terms of interest rate cuts. Okay. Tomorrow we will also have US job reports. This is also important. US trade negotiations throughout the week. This will affect the US dollar, and in turn this will be sensitive towards gold as well. So those are the couple of drivers for the week and also for today. If we are at the monthly, we are seeing 2 months of very indecisive candles. We are closing near the open, and so with this, with what's ongoing, we should see the price of gold closing around or after this gap here, because market did gap up. We should see at least a close around 3290 for the month. So I'm expecting an indecisive candle for this month, and with an indecisive candle we should close around 3300 to 3290. That should be the target close. Okay, so that's on the monthly. If we are going at the weekly, what do we see here? Very interesting movement on the weekly. We took out swing high liquidity here. This was the first swing high liquidity. If we were to go to the line chart, we would see that very often. But if we are at the candlestick chart, this candle was the swing high on the line chart. Price traded into these highs. We took out external weekly liquidity on the week of the 9th of June, and immediately we came 2 bearish weeks. So the week of the 16th of June and the week of the 23rd of June came bearish. Okay, traded bearish movement with the previous week's bias. We then expect a bearish week as well for this week. So I'm expecting price to continue to trade lower towards the downside. That is our bias for the whole week. Now, what's our bias for the day? Now, this is simple, a lot simpler. Where are our points of liquidity on the daily chart? Daily chart, we have a daily order block here, and we have a final bullish order block here. So bearish order block here, bullish order block here. This can be considered a breaker block. This swing low here could have been considered a breaker block, but we will not use that because it overlaps with this bearish order block. We will then use our bearish order block as a level of resistance. This will be a more valid order block for resistance. Okay. With that, two bearish candles, we then expect a third bearish candle as well, especially after a break of structure here towards the downside. So the daily chart is also supportive of a bearish move. Back to the 4 hour, onto the 4 hour, what do we see here? Firstly, we see a 4 hour fair value gap here, and we see a 4 hour fair value gap here. Two internal points of liquidity overlapping with the 4 hour point of liquidity. Okay, and what do we see here? We see overlaps. So I will set an alert indicating bearish points of reversals here and here. This is previous day's high. There is a chance we will raid previous day's high before continuing the move towards the downside. Okay. Now quickly on the hourly, what do we see? On the hourly, it's much clearer on the hourly. Of course, we have Asian lows and Asian highs. We have already took out Asian highs, and what we are seeing here is wicks on the top hourly candle. This shows us that price is starting to slow down on the hourly chart. It might begin to move bearish. Okay, we are inside the hourly order block, hourly bearish order block, and there is a chance for price to run bearish. We do have levels of FVG at these points. Hourly FVGs we can use as support for price to continue to push higher, but what I'm expecting is price to first come down. Okay, if we were to go to the 15-minute chart, let's quickly skip to the 15-minute chart. A couple of scenarios I want to mention for today. Okay, scenario 1, we ignore these levels of internal liquidity and respect this level of order block to immediately move towards the downside. First taking out lows here, taking out fair value gaps here, using fair value gaps as a level of resistance to take price towards our target of Asian low. Asian low will be our external liquidity target. So this is scenario 1. Scenario 2 is we enter levels of internal liquidity here following a bullish recovery. This is a bullish recovery. We broke structure on the hourly and the 15-minute. So we had a change of character, we had a break of structure supporting a bullish run towards the upside. Okay, we broke a break of structure, retested the 15-minute order block, consolidated before pushing up higher. Okay, so these levels will be our internal levels of liquidity to continue picking up orders, to continue move towards the upside before entering scenario 3, which is a level of consolidation inside these two levels of liquidity before moving down and closing at the Asian high. Okay, so scenario 2 and 3 does support a monthly candle closure within a level of consolidation, or within a candle of indecisiveness. Okay, it supports an indecisive monthly candle, and that is where we are with the monthly bias. So scenario 2 and 3 will support the monthly bias, but if we were to look at scenario 1, we will then get a bearish closing candle. Okay, closing at the Asian lows. So those are my 3 scenarios for today. If you guys want a quick screenshot or pause it here. You guys can form it like this. These will be our levels of interest. And now I'm just looking for confirmation towards the downside or confirmation towards the upside. We will then trade accordingly. Okay, I hope everybody has a very profitable remainder of the day. We did catch around 40-50 pips on that last trade. Very good trade. We captured it during the order block with a bearish confirmation. We then pulled that trigger and took trades and took a win of roughly 40-50 pips. Okay, with that, I hope everybody has a very profitable day ahead. I'll see everybody inside Team Market Makers and also in the free channel. Okay, take care.